What's going on, guys? What's going on? Welcome to my channel. My name is Donnell Lovely. If you're new to me, welcome. I'm the owner of Lovely Financial Services and Refund Tax Solutions. And on today's podcast, I actually want to share with you guys that some of the questions that my clients have been asking me. So I decided to go on live and bring it to you guys so many people having the same type of questions can be able to ask these same questions. And for instance, right? Where if you are a small business owner, if you are a realtor, if you are a real estate investors, if you are a small mom and pop shop or a single member LLC, sole proprietorship, or any one of those things, partnerships or anything like that, I want you to stay tuned to the end of this video and actually going to be sharing with you some things that we actually have that's going to help you be able to understand when to pay yourself and how to do it properly, right? So again, this is Donnell Lovely and I want you to welcome to my channel. Do me a favor, hit the subscribe button, also smash that notification, and also hit the bell button so it actually helps the channel grow. All right, so let's get into it when we actually talking about today. All right, again, my guys, my name is Donnell Lovely. I am the owner of Lovely Financial Services and Refund Tax Solutions, where we are a full-fledged tax and financial services company where we actually help people start businesses, grow businesses, get funding for businesses, as well as getting your business structure organized for the compliance for the IRS, okay? And today's video, I'm actually going to be talking about how to pay yourself correctly, right? So again, maybe you have your business that you don't have really any employees per se, right? And you really paying people maybe under the table or as a contractor or some form of that as well, right? So what I wanted to share with you guys is what I actually told my client before, because again, you don't want to get in a situation where you're getting exposed for fraud of unemployment compensation, fraud for insurance purposes, or not categorizing a person as such, as an employee, as a contractor instead of an employee. And I wanted to break that down to you guys so we can actually understand the difference, okay? So let's go to actually having the categorization of difference between an independent contractor, right, and an employee, right? So under the IRS code, right, under common law rules, right, anyone who performs services for you is your employee if you can listen to me, control what they will be doing and how they will be doing it, right? Also, for an example, if I have a person come to my house every single day and cut the grass, they using my equipment, right? They coming in at every Monday at 10 p.m. 10 a.m. They cut the grass, they mow the lawn, they use the paper, they use all my stuff. That person is considered an employee of me, right? Even though because I'm providing them things, I have a set hour and I have a set amount of money that I'm actually paying that specific person, right? They're using all my equipment and they have a schedule when they can do it. They don't dictate the amount of money that I'm giving them because I'm saying, hey, I'll pay you $50 a week if you come to my house every single Tuesday at 10 p.m. I got the lawnmower in the back, the weed eaters, everything. Just go ahead and cut the grass for me. And then I give you money on the table. Well, that's not the case because you're actually is an employee of that kind. So say, for instance, that the guy does that, right? We're going to actually talk to him as Don. So Don comes to your house every single day. You've been doing it for years, years and years and years. And then Don all of a sudden get hurt, right? On the job doing the line quality. He cut his foot. Well, by law, if you're using an employee, he's supposed to be able to have some type of benefit or some type of insurance if he works for you prolonged. And then now he's going to the hospital, he don't have insurance, and now you're having a whole different type of situation for that. He's out of job, then he's going to try to find unemployment on you, and then you haven't paid him unemployment. Now you got issues with the unemployment office, you got issues with not withholding federal taxes for him, then you got issues with not holding Social Security and Medicaid. So now you can put yourself in a position where you're being liable, personally liable for that person being injured on your home. Now, granted, if you have like homeowner insurance, things like that, they may help. But if you operate in a business or you operate as an employee out of your particular home, and that person injures himself, then you'll be liable for the business section of that particular home, right? So that's why it's important to categorize people in the right way and actually pay them accordingly, because you don't want to have those type of issues happen. Now, for instance, let's say again, if the person is a contractor, right? Well, this person is the contractor, what means he actually owns his time. He actually owns the time he's going to be there. He's going to tell you, hey, I'm going to be there on Mondays between 10 and 2. He don't give you an exact time, but he's going to say, I'm coming between 10 and 2. One day he may come at 10. One day he may come at 10:45. One day he may come at 11:30. One maybe he may come at 1:30. See what I'm saying? Then he has his own equipment. He has his own fuel. He does the service for you, and then you pay him as a contractor because he does contract work for you in exchange for services rendered. That you don't control his time, you don't control his equipment, you don't tell him how to do the job. You contracted him and making sure that you guys agree on what's being done, how it's being done, and he's responsible for his own transportation, for his own vehicle. He's responsible for his own equipment, all that kind of stuff. Now that is considered contract work, right? So what I actually see a lot of times in different businesses and different things like that, where people come into the business and say, hey, I'm going to need you to work for me. I need you to work a couple days a week. You're going to be on the 1099, but then I'm actually going to furnish you a laptop, and then you'll be able to get a t-shirt, and then you can come into the office. You may going to answer the phone. Well, now you really classify that person wrong because you're supposed to classify that person as an employee, right? So for some reason, you guys don't fall out. They go to the unemployment office and say, hey, I've been an employee with these people. They've been paying me, under the table something. Now I can't get unemployment. Now, okay, well, then they're going to do an investigation. They're going to ask the person what they've been doing, how they've been doing it, what classifies them to that work. And it's going to based on what they've been doing, based on if it's an employee or if it's a contractor. And if they find out that you paid the person as a contractor when they were supposed to get paid as an employee, now you got issues with the state that you're going to get fined and penalized for because you didn't pay the unemployment compensation correctly. You're going to get fined with the IRS, and you're going to get fined for the state because you didn't withhold federal taxes and state taxes and Medicaid and Social Security. So FICO, you're going to get penalized again from Social Security Administration because you didn't take that out from them as well. And you got all these issues that you're going to be having to deal with to try to be able to rectify the situation where you can just classify them right the first time, and that way you could have been able to keep yourself out of this trouble, right? It's not really worth it trying to pay people up under the table when something like that can happen down the road, and now you're being liable. So they actually gonna go all the way back until when they first started and see how you guys were working and what the agreement was, if there was any contract signed or anything like that. Even though you might have put in that they was a contractor and they signed your document stating that there was a contractor, if you issue them work supplies, if you're issuing them laptops, if you're issuing them things and you telling them that they got to be there at 8 o'clock in the morning, they leave at 5 o'clock, that's classified as an employee. And you don't want to make sure you as a business owner, you as the individual don't get caught up that way, right? There are different benefits and different ways to pay people, but this is a major way that you can get in trouble, right? So you don't want to get in trouble. So now I want to actually talk about and break down the proper way to be able to classify somebody. Well, we've actually talked about that, but how to pay yourself. Like I am the single member LLC. I'm the sole prop, and as a single member LLC, you're a disregarded entity by the IRS anyway. The LLC is only for the state that you're living in. It's a state, statute, meaning it protects you from your personal liability on a state level, but for tax purposes and IRS, anything outside of an actual corporation is considered a disregarded entity, meaning that you're actually going to have used to file all your business information on your personal tax return as a Schedule C, right? And then you're going to pay self-employment tax from those particular, from your Schedule C income, right? It's taxed that way. So in order to be able to pay yourself correctly, then sometimes I see people that just take what's called owner's draw, meaning they just write themselves a check out from their from one account to the next account without having a payroll intermediary covered like that. And then according to the IRS directly, anytime you having payroll taken out, you got to pay your payroll. You got to pay the taxes on there, the Medicaid, and in unemployment insurance, right? So anytime that you're doing that, you want to make sure that you set that up correctly. So there's a couple companies that you can go through. You can go to Gusto, GUSTO. You can go to ADP, or you can go to a company called Paycom. And these all are more of the payroll processing companies. And also, some CPAs and EAs in your local area, they may offer that type of service as well, payroll processing, so that you can be able to make sure that you're doing that correctly, right? Now, also, in order to be able to do that correctly, you may want to change the entity that you have. Instead of having a single member disregarded entity, you may want to think about converting that to an S corporation, right? Now, what an S corporation does, it gives you the corporation title and status. It allows you to pay yourself a payroll, and it also allows you to pay your children, your spouse, other people on payroll. And now it separates yourself from your personal taxes, even though it's a flow through entity, meaning it flows through all the profit. I mean, everything, all the profit and things like that flows through to your personal on a K1, but you're avoiding the 15% self-employment tax, which lowers your particular individual tax rate. It allows you to use different type of deductions and expenses, far as appreciation and amortization, that you wouldn't necessarily use on a Schedule C itself. And a Schedule C is limited in what you can deduct versus an S corporation. It has a lot of other deductions where you can pay yourself insurance, you can do match insurance. So you're a full-fledged corporation, and you may want to go that particular route to be able to structure that particular business so that you can actually pay yourself correctly. So now at the end of the year, or now you're paying yourself throughout the year, all those money comes down off of the business side, and as well as going to actually give you your own personal W-2. So again, and the reason why we do this is because that we can make sure that we have income that we can report. So unless we actually need to go get a business loan or something like that, we have a W-2, we have the business income, and we actually have tax returns that's not being, trickled down to nothing, right? I see this a lot of times with a lot of my clients that they actually make money throughout the year, but then when it's tax time, they write off so much stuff. They try to write off everything when they actually leave them down to nothing. So now when they actually trying to get a home, they're trying to get financing for other things. First thing that the lenders and the lending institution going to ask for is we're going to need a copy of your tax return. We're going to need a copy of the last 2 years tax return. We're going to need your financial statements for the last 2 years. We're going to need a lot of your books, your profit and loss statements. We're going to need, all these things that you have as a business owner. But if you had a W-2, then you can actually have your W-2 as your proof of income, because now you're putting yourself on a salary. You have yourself a W-2 income, and now you can just use your W-2 income, and you don't want to have to go through the whole 2-year tax return, even though they may ask for it, but you still have proof of income with the W-2 route, then having to write off all this stuff, do amended returns, and then, trying to figure that thing out and try to get explanations on why I spent this amount of money and all that money, and then you got to go back and pay taxes on the money that you reclaim, and it's just a lot of other things that can happen when you're not doing business in a good way. So anytime that you're trying to get loans, get funding, those are some of the thoughts you may want to put inside your mind and say, okay, if I'm trying to get finances for a project in year 1, year 2, year 3, I need to show income on a tax return if I'm self-employed, and if I'm not giving myself a payroll, so that I can show that I have income coming in from the business, and it's not going out. I made 200,000 and now only got 30 grand or 40 grand worth of income. It's not going to fly when you're really trying to do that from a lending institution standpoint, right? So those are some of the things that we want to make sure we do when we actually understand how to pay ourselves correctly, how to classify and identify a self-employed employee versus a contractor doing contract work, and being able to pay them accordingly. We understand the processors that we need to actually go through, either Gusto, ADP, or even Paycom, or some other ones out there that you can actually use that's going to help you with that process as well. All right. So these are some of the things that we can actually do. If you guys need help with this, any questions, comments, we definitely appreciate it. Any more topics or any questions that you may have, go ahead and actually put it in the comment section. Again, subscribe to the channel. My name is Donnell Lovely. I do these things for for my community to help everybody understand some of the business aspects of it, some of the tax laws, and being able to actually, not have to, write off all your business and also pay yourself correctly to avoid a lot of penalties. All right. So with that being said, guys, I hope you had an awesome, awesome day, and we'll talk to you soon. Peace.